good afternoon. How are you keeping? You okay?
Yeah, okay. Yeah, some network issue. I think for this reason, could not understand this listening the sound as well. Now clear. Okay.
Which one?
Yes.
The yesterday one?
No, no. This I think
Can
I
you
joined 2 days. Yeah.
can you hear me now?
Yeah. Now here. Yeah. Properly here.
Okay, welcome. Thanks for joining. Yesterday lesson I recorded, yes,
Okay.
and we went through LO1.
Okay. Yes.
Today we'll look LO2, learning outcome 2, and
Mhm.
I will share with you. Are you on the Moodle?
Yes.
Okay, brilliant. So we'll introduce ourselves. My name is Anjum Satar. I'm working with the UK University last 10 years. And I'm also teaching at University of Bradford and Leeds. And my background is ACCA and AAT, and I'm teaching, various sort of courses, MBA, BSc in business management, accounting, and finance and marketing, these three areas.
Okay.
So that's all about me. And if you don't mind to quick, introduce me yourself, where you from, what you done, what you doing, please.
Yeah. My name is Bidhan Mandal. So I am working here in an accounting firm. So the farm name is ARN Hoxton. So the last 2 years I am basically working here. So I have some experience regarding personal tax return as well VAT and corporation tax return. But yeah, I last yeah I registered with the IFA. I mean this course personal taxation. So, but need to start this module actually. I mean, IFA personal taxation. So, for this reason, whenever I first see that the regarding the assignment the discussion, so I quickly joined. So, because last few couple of months I was busy with some other works, so
Mhm.
not get the time to do this assignment. I mean, personal taxation. So in a quickly basis if if I got this some guideline so regarding how to prepare or this quickly basically but I mean very initially whenever the assignment issue was discussed, I mean presented that I also missed this thing, but I joined the classes. I think your classes
Mhm.
in 3 or 4 classes I joined for
Mhm.
personal taxation, chapter by chapter. You briefing the many things, but assignment issue I was a little bit, the far from this assignment. So I need the help to quickly basis the how.
No problem.
I mean
No,
short
what
guideline
we can
to
do,
prepare. Yeah.
no problem. What we'll do, we'll do assignment discussion in not next week, the following week. But we can arrange one-to-one tutorial if we need to. Okay, that's a
Okay.
separate. Now we are delivering the unit today. We are looking LO2, learning outcome 2, and
Okay.
we'll do assignment brief after LO3. Yeah. So then we can further, but if you need before that, we can book it one-to-one tutorial.
Okay.
Okay, so we can go through the things accordingly as wherever you think, any clarification or any examples or whatever we need to know. So we can go through,
Okay.
and I can send you the stuff, as well, and the sample assignment that will help you too. Okay, so, okay, welcome. Can you see the slides?
Yeah. Yes, that's clear. Yeah.
Welcome. So today lesson is all about LO2, calculate income tax and national insurance contribution for the taxpayer. So last lesson we discuss about basic tax rate, we discuss about progressive, regressive tax, proportion tax, and we discuss about the tax system in the UK, and that was the key, direct, indirect tax. Today lesson will go
Okay.
through LO2, and we
Okay.
have an indicative content. We'll go through the personal relief, We'll discuss application of relief for the pension payment, charitable donation. We'll calculate income tax, national insurance, and we'll discuss about explaining national insurance. Our all discussion will cover these all the key indicative points. Okay. So please, whatever years you want to use it, you can pick the finance act. Better to be used the latest one.
Okay.
If I'll say here ACCA Finance Act 2023, of course 2024 will be applicable from
Okay.
next. So we have here, we can look around the rates, yes. So first 12,570 pound no tax. Then £1 to 37,700 is a 20% tax. Then we have a higher rate, 40% tax up to 37,701 to 125. But after 100,000 every pound you earn, your personal allowance will be half. So that's we need to be look around. And additional rate is 45%.
Okay.
So we can look around the saving. Saving income is a nil rate. So we can look around higher tax rate is taxpayer. A basic taxpayer is £1,000 exempt, no tax on saving income, but if you're a higher taxpayer, then 500 will be exempt. So on. So these are the basic, the rates. Then we've been given this various scenario where the rates been applied. Like you will see here, the trading profit is, and we have all these examples. These are quite good examples to pick the example and use in our assignment. Yes.
Okay.
Scenario. So when you bring,
Sorry for interrupting, sir. Dear sir, regarding this link, actually this example is a good example, I think. So this is the link. Oh, can you just can you just
I
link this?
send you in the
Okay,
chat.
okay,
I send you in the
okay,
chat box.
okay,
So
okay, okay. Thank you,
that's
sir. Okay,
that's we can. Otherwise, I'll send you the book as well separate. Okay.
okay, yeah.
So other thing, you can register yourself on Open Tuition, which is absolutely free. Then look under F6, which is called a financial. It's a personal tax, yeah, personal and business tax. And you can download the booklet. This is the latest booklet.
Okay, yes.
And this I can download and I can send you this later on. I'll share with you. So that's there. And when you go down, you have a lot of examples. We can use it for our assignment purposes.
Okay. Oh, okay.
So all
This is very helpful. Yeah, the open book tuition. Okay.
Yes, so all the
Okay.
question, answers, self-assessment, everything there. So that we can link. So as I mentioned, calculate the taxable income of employment, investment, and property. And we can look around. Of course, I just mentioned the rate. We can look around car individual saving, car benefit. Car benefit it varies because depend nature of the car, how much the CO2 is, how many grams, yeah, what you inside. So that's we need to look around according to the question. We can pick few examples. Okay, we can look around source of income, saving income, employment income, rest any income. So we can look around and we can calculate. So in this calculation employment income we've been given, we have person receiving in 2019, 20, doesn't matter whichever year, of course, we can apply the rates. Yeah. The rate,
Yes.
not really a lot changes happen in these years. So we have a bank interest, we have a dividend, we have a salary, the individual salary is 50,290, bank interest, dividend. So total income is 58,590. Non-saving income, employment income is this. Saving income is this. Then we have 12,500. The year was no is 12,570.
Yeah, 5,070. Yeah.
So we can say after this allowance, how much is the income left? So then we can say first 37,700 is, we said how many percent is 20% taxes. So the saving will be, because this is the basic taxpayer, the basic taxpayer on the saving will be 20% tax. Yes?
Mhm.
And then the dividend, we can look around, the dividend rate is 8.7%.
Mhm.
So when we did these, we can say 37,000 in that year was the 37,500. Now it's 37,700. Huh? So of course,
Okay.
that's after,
37,700. Yes.
yeah.
Okay.
So that's, slightly changed. Yes. So you can apply
Yeah.
the rate, and then we can say is the tax liability is this. Then we have a non-saving. Yeah. So because that was 37,790, so 290 will be higher rates, yes, which is a 40%. And saving income is 500. First 500 is a no tax because that's a basic taxpayer. The rest it will be higher taxpayer because that's a 40%. Yeah? Then we look the dividend. First 2,000 if you're a basic taxpayer on the dividend, no tax. Yes. So dividend income was 7,000. Less 5,000 will be 32.5% tax. So where I'm getting all the information rates, you always go back to the rate, whichever year you're using, look around what is the rate. Can you see here?
Okay.
That's for dividend.
Yes.
So that's rate we are applying. So because in this example was to calculate the tax, yes, and the tax liability. So we have total tax liabilities. So income tax liability was 9,561. And we she already paid through pay as you earn, yes, 8,000. Yeah. So rest of the tax need to pay 1,161 pounds.
60. Okay, yes.
Yeah. So she's entitled the explanation which we already applied there. Yes, 500 is no tax. Yes. On the saving income, because when you're looking overall income, you can determine that first you do the non-saving, which is employment income, then you do the saving, and then you do the dividend. And if you have property, you can treat property income as well separate. Huh?
Okay.
Okay, then we have other example. The person is earning 141,000 income from the property, bank interest, and dividend. So we have a property income, we have a bank total income is 160,000, personal allowance is 0. Yeah. Because if you're earning more than 100,000, every pound extra your personal allowance will stay half. If you're earning more than 125,000, your personal allowance will finish.
Yeah, that's true.
So what we'll do, non-saving base rate, because it's a higher taxpayer, so there is a no limit 500 as well. Yes, state we can charge 20% tax. Okay?
Yes.
37,500 now is 37,700. So
700.
That's 103,500 is 40%. Yes. Then we can do the saving income 40%, 45%. Yeah. Because the limit, and then we can dividend first 2,000 exempt. That's still now 38.1% because it's a higher taxpayer. Huh? Okay, then we can calculate the tax liability, how much. So 55,755 pounds is a tax if you earn total income 160,000. That's only is the tax element. So rest of the income will be left 105,000 approximately. So after the tax, yeah. And then she need to pay 13% NI, 10% pension approximate, yeah. If we are through the, okay, that's all for this example. Yes. So 1.1 was apply and calculate. Yes. Here apply the personal allowance 12,500, deduct from the income, offset the gain. If we have a gain, yes, capital gain. Allowance reduce is adjust income exceed and reduction 50% everything whatever you are. So if your income is 125,000 minus 100,000, So you have a 25,000 more, 25,000 divided by 2. So that makes 12,500. Yes. So personal allowance can be fixed. So
Okay.
salary is 50,290. Bank interest is this. Dividend is this. So we can put it again in the box. Yes. And we can say how much is allowance. Yes. And we can calculate exactly the same which we done.
Yeah.
Which we applied now personal allowance. Yes. So that was the question, which we applied the personal allowance in this. So that's we need to. Then determine the tax value of the benefit in kind. What is the benefit in kind? If you have a company car, your personal allowance will be. If you have a company car, you know the company
Yes.
give you the car, your personal allowance will be reduced according to the value of the car. Because that's come under the benefit in kinds.
Yeah.
If you have a company house, company car, yes, living accommodation, car fuel, car van, beneficial loan and the gift, everything is come taxable benefit. Yes, you have to pay tax on the benefit. Maybe we are very pleased, our client very pleased, I'll get the company car, oh, it's a new car, company giving me free. Actually, you're paying your pocket. That's nothing is a free. Yes, to the tax man. Okay, so we can look around the, we've been given subsidized canteen, which is available for staff. Removal expense up to 8,000 new employment, like when you relocate in the job, you can claim up to 8,000. Hotel costs while looking, yes, somewhere to live. If the employees need to be moved in 2019, expense must be incurred. The benefit provided in, yes. So we can look around how much income and expense incurred. But if you live in the UK, up to £5 per night is exempt. Yes, you don't need to pay the tax on the amount. But if you live outside the UK, £10 per night. Yeah.
Okay.
Like say company paying you money and you living, yes. So first £10 you're not paying any tax. So if the payment exceeds limit, whole amount is taxable. Okay. Even is expense, but that's not exempt expense. Yeah. So can be at the workplace or other premises, employer manage the finances. Sport or recreation activities is available for staff, not the publicly generally. Facilitates, and these are all the benefit in kind. So we can look around in the scenario, and then we can look around the rules, yes, in the IFA. So let's look this example. We've been given the price. Car price is 25,000 throughout. Yes. Our employment paid only 23,500 for the car after discount. Yes, car is RD2 standard. The CO2 level is 107. Given employment paid 5,000 for diesel during the year, 50% which was the private journey. Yes. So the 50% is on the benefit, the value of the car. Yes. Which we look in a minute. And then we can look around. In addition, the contribution £40 per month for his private use. He is paying and £30 per month for the private diesel. Yes. Calculate the benefit in respect of the car and calculate the benefit in respect of the fuel. So what is the car ambition we have? 107, yes. Rounding down 105 because 105 is the limit we've been given. So 105 minus 95 up to 95 is no, yes. Then count by 1 over 5. That's the formula recommended by HMRC for the tax calculation. Any addition than that, you have 2%, yes?
Yes.
Plus 23% plus 4% because this is the diesel car, yeah? And diesel is you have a high level. So 29% is the car benefit, the listed price we have. 5,000 max you can claim. The left is 20,000. 20,000 is 29% of that is come under the benefit, yes, which you getting benefit of 55,800 worth of the benefit. Less employment contribution you are paying towards your the car, yourself 480 pounds. So total benefit left is 5,320 pounds. The benefit 24,100 rate is 29%. Yes. Less implies contribution on the fuel. There is a 0. Yes.
Yes.
So the taxable benefit is there. The price paid by the employer for the car is irrelevant. Yes. And there is a no deduction for given contribution towards the fuel, as she has not reimbursed. Yes, and no, on this one we have to pay the tax on it because that was the benefit. Yes.
Yes.
So technically you increasing your income and you paying 20% tax on. Yes, whichever limit you will fall. Okay, then we have then 2.4, we've been asked calculate the total income tax liability and national insurance contribution from the given data. We've been given the paid gross, paid benefit, class 1, class 2, yes, whichever class you fall, yeah?
Yeah.
Of the implies. Paid implies, paid imply. Of course, no, 4,000 is called employer allowance is available as well. But
yes.
It depends how many. So national insurance contribution in respect of the employees class 1 paid on the gross earning. Yes, employer secondary contribution paid on the gross earning. 1A contribution paid, taxable benefit. 1 implies contribution, implies age is 16 of the state pension age or employer, yes, deduct, which we can look around separate rules, yes, where the employer class A are, yes, and then we can calculate in the according to their contribution, yes, NI contribution.
Yes.
So what we can do in this one, in this booklet, yes, we can look around here NI contribution as well, national insurance, yes.
Okay.
So we can pick examples and we can add it when we'll go through the assignment brief. Okay, like 13% now according to the new rates, yeah. So
okay.
if I'll go on the page 95, yes. So 95, maybe one page down, yeah. You can slightly page number different in actual handout. So that's we have, yes.
Yeah.
So we can look around. Now, of course, personal allowance, we'll see, yes, earning, we'll see the employer class 1, 13.8%, yeah? The
yes.
first. So we can look around these and we can apply and we can pick, one scenario. You will given a rate here. Implies, yes? So that's no contribution. If earning is, yes, 12%. Yeah. If above than that, additional 2%, yes?
Yes.
And then employer 0 and then above
13.8%.
And employment allowance 5,000, yes, employer can claim.
Yeah.
13.8% is contribution. Huh?
Yes.
So we can look around this and we can add examples to address the learning outcome in actual assignment. Huh? Okay. Yeah. And then we have in this one explain how individual can minimize the tax liability. Yes. So we can look around implies contribution in that year was 12%. Yes. If exceed that, the rate, it goes on 13% contribution, 13.8. Employment allowance, yes.
Yes.
In that year was now is of course is the 5,000.
5,000. So, yes.
A 1A contribution, and then we can look around. We've been given salary, we've been given benefit, accommodation company providing benefit, yes. Free meal is getting, vouchers getting. So these are all the benefits, yes. Salary is there, benefits, yes. benefit respect of the company card and the fuel not applicable in the insurance purposes. Yeah? NI. So voucher, and then we have total earning is there. Yeah.
Okay.
And then we can say how much is, yes, 12%. Yes.
Yeah.
At that time was first 8,632 was exempt. Yeah. Now it's 12,570 is exempt. Yeah. Then you pay 12% NI, and remaining you pay 2% NI. Yes.
Yes.
So that's the way we can calculate NI contribution. Any question?
No, that's fine. That's fine.
Okay, if we look the distinction criteria, relief on the pension and charitable, but the pension is a lot of things being changed in the rules last 2 years, 3 years. Yeah. So we can look around the contribution, we can look around the tax schemes. Yeah. Payroll giving, contribution deducted from the salaries. Yeah. And if you're giving charities, yeah, those are of course, you can claim back the money even if it's being deducted at source. Huh? Gift aid scheme or all others. So we have employment, we have personal allowance. Then we can say taxable income. Then we apply the tax rate is 20%. Yes.
Yeah.
And then we can look around other is. Okay. So we can look around the 40% of the remaining, and we applied the rate, and then the working is being given the pension allowance. Yes. Basic personal allowance, less your gross gift and contribution, yes, which we said, because the tax was deducted on source, yes, so 20%. So we can times by 100, we can gross it, and we can minus it, because that's, we can claim back adjusted. Huh? Adjusted net income, less the limit of 100,000, excess of 100,000, 50% is excess, yes. Personal allowance can be revised, yes. So personal allowance was left only 5,750 pounds, yeah. So then we can revise threshold 37,000, yes, up to 150,000, and gross gift we have and revise. So we can revise based on the gift you have, other you have a gift aid, so you have to look around, and then tax rate you have to apply to calculate it. So basically each year we can look around what we have. Like here is the example 53,000 less pension contribution, yes. After the pension contribution, now is the rule when you withdraw the pension, yeah, you have to pay the tax if you're not paid before. Yes, lump sum pension that was free, now it's not free, yeah. Because at the moment you're not paying tax, when you withdraw it, you have to pay the tax on it. Okay.
Sorry.
So a lot of rules change on the pension, yeah.
Okay.
Because in the beginning there was motivation. People used to contribute a lot of to save the tax, yeah. While they paid.
Here is one question. Normally the pension regulator, which I found, this pension contribution is some the organization, the government is compulsory, but if the employee sometimes opt out from the pension,
No,
so
now is becoming compulsory for, you can in the certain cases, but the government making it compulsory for, and employer is saying you must pay. Yes,
okay,
still is the
okay,
voluntary in the certain professions and all. Yeah, but
okay,
if I'm paying 10 and my employer giving me 20, so it's not
yeah,
worth it. I will opt out. Yes.
okay,
So because I'm getting 20% free by paying my 10%
okay,
in the teaching.
yeah.
Yes. So I'm saving 30%. So no point I can opt out. Yeah.
Okay, but some
I
of the
can
organization,
I can
be-
retire
be-
at the age of 55
okay,
instead of.
because what happens, this some of the employer basically try to, this, because the employer cost is higher than the
Yeah.
employee
These
getting
are
pension.
loopholes, of course.
Uh,
Okay.
okay,
Maybe the staff
okay,
motivation can be dropped due to
okay,
those people
yeah,
looking at
yeah,
people. But
Okay.
maybe for time being, I'm getting higher my money. I will be very pleased if I have to wait, 20 years further.
Okay.
So that's, some time, but when think the people deeply, they think, come on, this is not good employer.
Okay.
So
Okay.
yes,
That's
of
true.
course, we can look around in the lot and long term, short term, so we can look around these contribution. We can calculate the tax liabilities, applying the personal allowance, and so the contribution of the pension, yes, income tax liabilities, and we can say, what we have, yes. So
Okay.
we can calculate, work extended BR brand, yeah, because what
Okay.
you paid it already at source, you can gross it and you can include into if you paid at source. So what we did, we included some links here, yes,
Okay.
do some quizzes and look around the economics and other perspective. So, but it's quite good to follow this booklet, yes,
Okay.
because the tax element is of course depends on the scenario, yes. So going and applying the rates, and we need to really learn about how to apply the rates, yes. Of
Okay.
course, there can be number of scenarios because sometimes it's very difficult to be fully hold on the tax, yes.
Okay.
Because every your client scenario can be different, yes.
Of
Like
course.
husband, wife, and personal allowance and benefit and number of other things. It can be linked to domicile, yes,
Yes.
schedule 180 days or whatever, yes,
Mm.
resident, not resident, overseas incomes and all this, capital gain.
Okay.
So that's the best way is we can look around within the book, we can go through the assignment and we can pick the examples and we can go through accordingly.
Okay.
Any questions?
No, the basic thing is okay, but I just need to look into the, I'm going to go through, I need to go through whatever the material you suggested. So I just need to go through
Okay,
these things. So
no
open
problem.
tuition as well.
Yes, you're absolutely right. So what I'm going to do, I'm going to send you this via, I'll share it
Yeah.
with you if you can now.
Yes, that will be better, I think. CCA taxation, TX, finance,
Yes. So I'm sending you this booklet here. You can download now from the chat.
okay. Okay.
So that's you can keep it, yeah, and that's you can go through. So
Okay.
when we'll go through assignment, we can pick the example and we can add it. You can snip it
Okay.
out. You can say, in this scenario, Miss so and so is on her income is this and tax liability is this. Yeah, she can
Okay.
question tax planning. Those we can address it accordingly.
So, sir, one thing. So, regarding the assignment,
Hmm.
so I'm just little bit less understandable. I think I mean not clearly understand the assignment, the how we need to do, or basically what types of example we need to do,
Oh,
or what.
okay. Let's say let's say you have a LO1 and we did LO2.
Yeah.
2.1 was about, you calculate the employment income. So you can pick one example of employment income and non-saving
Okay.
income and saving income. Just add it the example in your assignment. You can say in this scenario, as given, yes,
Okay.
in Mr. So and
Okay.
so have the tax liability, this as my calculation or the book calculation indicates, yes.
Okay.
And
Okay. 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 Okay.
because of course
I mean,
we can't use
okay.
PL. Sometimes a GDPR general data protection, someone
Okay.
personal affairs we can put. These are example we pick from Kaplan, so we can say according to Kaplan examples, yes, or according
Okay.
to you pick from ACCA and out this
Okay.
and this year.
That will be give the reference. Yeah.
Yes, we can do the reference,
Okay. Okay, now I understand. Okay, so related to the, I mean, LO1, LO2, like this.
Yes,
So I
that's
need
all.
to
Like
okay,
LO1 is about what is the tax. What is meant by
structure.
progressive tax system, resident, domicile, yes? Those are
Okay,
LO2 is a tax liability calculation in different scenario, 2.1,
okay,
0.3, yeah?
Okay, okay. That's
And
fine.
then when we'll go through the LO3, so we
Yes.
look again, LO3 where we look the ethics and the rules, yes, and the tax planning.
Okay. Okay.
That's
Okay,
the
clear.
three learning outcome we have in the assignment. These three learning outcome which we learn will be assessed in the assignment brief.
Okay.
The assignment brief is mentioned you're working as a tax advisor and your client is this, yeah?
Yes.
Advise and add the example and suggest it, yeah?
Yes.
Tax planning and all, yes?
Okay.
Maybe we can suggest, you can transfer the marriage allowance because that person and other will, because it's a high tax earner can save much. Yeah, those sort of examples, which we'll go through according to the assignment brief.
Okay.
Okay. But this is
Okay.
learning outcome 1. This is today we discuss a learning outcome 2. That's your task to approximate. Yeah?
Okay.
Okay.
That's fine. Okay. Thank you.
Well done. Thank you. Have a lovely weekend. A bit left.
Yeah,
And
thank you, sir. Thanks. Great, great. Yeah. Have a lot.
hope so weather will behave good for a walk.
Okay. Sorry, sir.
I'm saying, hope so weather will behave good. We'll be sunny and we'll
Yes.
go for a walk.
Okay. 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 Thank you, sir.
Great.
Thank you.
Have a lovely evening. Nice to meet you.
Yeah.
And we'll discuss, LO3. You can join in next lesson and we'll go through LO3 and then on the Sunday we'll go through our assignment discussion.
Okay. Okay. Thank
Saturday
you,
we'll
sir.
go through
Okay.
LO3 and Sunday we'll go through assignment discussion and then daily we'll finish. Until
Okay. Okay.
that point,
Great.
if you have
Have a
any
lovely
questions,
weekend. Have a lovely weekend, sir.
same to
Thank
you.
you.
Thank you. Bye-bye.
Bye-bye.